Going on the market, like we were pointing out, we're just around 70 points away from that 20,000 mark on the Nifty. So Rohit Srivatsava joins us from indiacharts.com to take us through how he sees the outlook for the markets from here on. Rohit, it's always great talking to you, so thank you for joining us on the show once again. Like I was mentioning, just 70 points away. We had a very solid last week. And, how do you really see things moving from here on the Nifty? I will come to the mid and small caps, of course, but, how do you see things moving from here, and how much longer do you think that 70-point move might take?
Yeah, we hope to get there sooner than later. But I do think we should be there this week, whether we do it today or whether we do it, after a small dip. And in case there is any dip, I think now 19,800 is the trailing support on the hourly chart. So I'm not sure we go below 19,800 or 19,700. And on the upside, we are looking at going to around 20,700. Extremely optimistic would be to go towards 21,190, which is almost the quarterly Bollinger Band, two standard deviations up on the quarterly charts. But 2,800 is, I think, the next objective once we cross the 19,991 all-time high that we made previously. Now, similarly, if I think about the Bank Nifty as well, I think support would be at around 45,000. And we look at going towards 47,700 from here, which is also surpassing the previous high that is closer to the monthly bands. So those are the levels we are really watching for. I do think the momentum continues because, this is September and we've had a bad August. And, seasonally, July is usually the best month of the year. After that, August is also fairly okay. It is not the greatest, but this time around it ended up being negative. And sometimes when you get an extreme move, the subsequent move also seasonality can get affected. And I think in that sense, while people generally expect September to be worse than August, I sense that the opposite may be possible. That is, September ends up being a very, very positive month for the indices, key indices especially, which are driven by large caps. And that's the pattern that we'll work around. If we look at each of the previous rallies also, they've lasted for at least 3 to 4 weeks. So far, we are up for around 2 weeks from the low right now in Nifty. So I'll give it at least another 2 weeks, if not 3, to complete this move, which almost makes up most of September.
Okay, so 20,000 this week and 20,700, 20,800 also on the charts. Rahul, how would you respond to many in the market who believe that there is some irrationality, exuberance in the mid and the small cap universe?
Yeah, so there are 2 degrees to really think about this. One is the immediate setup, and one is slightly longer term. So to think slightly longer term, what you would look at is things like, ratio charts. If we look at the ratio of the Nifty mid cap 100 or the small cap 100 to the Nifty itself, you will find that we are somewhere halfway through the typical range from a top to bottom that we've seen for these, ratios. And that means it's far from complete. In fact, the ratio for the mid cap to Nifty was flat for most of 21, 22, and we broke out of that in April. So, and these cycles can last for, a year or two, which is outperformance of mid cap relative to Nifty. We are barely 6 months into this game right now, so it's a bit early to be calling the end of this move. Some people are talking about valuations. So I did a quick check. Where are the valuations for the mid cap 100, small cap 100? It's around 24 times to 27 times for each of them respectively. Where were they in 2018 when the Nifty was 12,000? They were almost at 80 to 90 as per historical NSE data that was there at that point of time. Now they've moved to consolidated data. Even if you do that, it may have dropped from 80 to 50. So the PE ratios on a historical high basis are still half of what we've seen at the peak for these segments. So are they really expensive? It may be true at a stock specific level, but may not be true at an index level. So that is the first observation. In fact, for Nifty, that is even more blatant because it's only at around 21 times, given that earnings grew almost 30% for this quarter. So then what is the problem? The problem is that some short-term technical indicators like the RSI, which are being talked about, have hit 85 to 86, both on daily and weekly levels for mid and small cap indices. So that definitely puts them in extreme overbought zone. Overbought is typically above 70, above 85 is extreme. But that is not true with the main indices, which means for a Nifty, you're still at a 66 kind of level. So you're still not even entered the overbought zone. Essentially, what has happened is while the large caps were correcting in August, you ended up seeing the mid and small caps continue to race up. And therefore, you have this divergence of, one segment being extremely overbought and the other being nowhere close to that. So I think what happens in September is a massive catch-up of large caps to the mid caps. The correction in the broad market might eventually happen once that catch-up is complete.
Rohit, hi, good morning. Kotak today came out with a note, and they're calling it not mid caps anymore, but mad caps. That really stayed with me. That's the kind of market we are in, right? Where you got to start looking at terms differently. Speaking of mad caps / mid caps, what have you made of this absolute almost crazy rally on railway stocks, actually even PSU stocks overall? I think for a lot of people, the question they're grappling with is that every time you think it's over and done, I mean, these stocks bounce up another 30-40% and they prove you wrong. And there's this feeling of being left out because the people who track fundamentals are saying that there is a long-term sort of fundamental change that's also in the making. So I think people are finding it very difficult to wrap their heads around what to do with PSUs in general and railway stocks in particular. Are you picking up any indicators in the charts and any leads here that we can look at?
So if you look at a very long-term chart of the PSU index, it was inside a trading range from 2008 to 2020, almost for 10 years. And we've broken out of that in this last 1 year. So it's a major breakout. This is not something, that just happens. I think the last time it happened was probably in 2004, when you got out of the previous range, which was between, the early 1990s to 2007-8 year kind of a congestion zone. People had started to hate the PSU stocks, and from that hatred came hope and then a economic cyclical turnaround in the economy. I think the situation is very, very similar. We've been through a hate period. Everybody hated PSUs two years ago. That's where value investing first comes in. And now you're actually starting to see growth essentially coming from the main economy, government spending, and various other sources. And so this is a completely new cycle. You cannot compare it to what happened in the last 7-8 years and say, this was the range and therefore it's gone too far. This is a new beginning and it's going to last for at least a couple of more years. So I would look at opportunities on pullbacks. I don't want to rush in and jump on something that's moved 20-30% because PSUs are behaving like mid caps as of now. But as and when they do pull back and consolidate it, which they do very often in their longer term path, that's when you want to get in again for the next move because it might not be over long term.
Okay, yeah. Instead of mid caps, maybe you can say more like micro caps. The way these stocks like IRFC and all go up. My goodness, I haven't seen anything like this before in the last, I think, 17-18 years at least. Not me personally. Thank you so much for joining in, Rohit. Always a pleasure having you on the shows. Really appreciate you being with us today.